Special funds. What are these? Okay, how do one get started? And by the way, what areas do they invest on? Are these things safe? How reliable are they? Should I invest? Are they high risk? Are they low risk? This is that video that you've been looking for. It's all about special funds. And I'm going to take you, step by step so that I can explain to you in a detailed way what are special funds. This is Good Joseph. In case you're watching me for the first time, I talk about money, investments, anything related to that. Go ahead and subscribe because I upload this kind of videos each and every day, leaving you with tips each and every time. And if you're a returning subscriber, thank you for your eyeballs for always turning on and watching my videos. Let's get on the business now. We're talking about special funds. What are these? And by the way, listen, I have myself a backup here so that I don't leave any stone unturned. Let me just give you a very simple definition. They are professionally managed investment vehicles that focus on non-traditional assets like real estate. First of all, they are professionally managed investment vehicles that focus on what? On non-traditional assets like real estate, private equity, and potentially derivatives, aiming to offer higher returns and diversification for investors. Okay, let me pause from there. What are these? They are professionally managed and they aim to earn more return, compared to the traditional way of investment. They go an extra mile to look for areas to invest to leverage on the returns. Are we together? Now, one thing that you're supposed to understand is that they are type of CIC or CIS. What are these? These are collective investment schemes. They are form of what? CIS, collective investment schemes. What does it mean? A collective investment scheme, let me just write here, collective investment scheme. This is where simply money are pooled together. What does it mean? Your money, someone else's money, and our money. Once they have that pool of funds, under professional guidance, that money is invested in variety of places. And of course, it's not the traditional one that we are used to. So they leverage in investing in different areas so that they can do what? Get more returns. Let's continue. Now, what happens with the special funds is that pulling money from multiple investors to invest in a specific strategy. Are we together? Now, these special funds, they bear some certain characteristics. Are we together? Number one is that they are non-traditional investments. These are not the investment that we are used to in a traditional way. These are the investment that they leverage on other areas out there. Are we together? They invest in assets beyond typical stocks and bonds. They also offer high potential returns. They have higher returns. You find they are talking about 20%, 25%, 19%, whereas the cash or cash equivalents or likes of the what do you call them? The government securities are giving you 14%, 13%. Money market fund right now we are speaking of 12%, 11%, or 10%. Okay, now these ones are giving you higher returns compared to those ones that we are used to. They also offer something called the portfolio diversification. What does it mean? The term portfolio diversification, let me just put it on board. Portfolio diversification simply means putting your money in different areas. They don't just put your money in one area. Are we together? They can put some money in commodities, they can put some money into international bonds in other currencies and what have you. You get what I'm saying? Okay. Now what happens is that they diversify. They put this money in different sections, okay, so that at least they can be able. You see what I always tell you, that don't put all your eggs in one basket. So the moment you invest in these special funds, your money is not invested in one area. Your money is actually fragmented and invested in multiple areas. Are we together? Some is in gold, some is in silver, some is in oil, some is in wheat, some is in actually another, what do you call the ETFs, the international ETFs or index funds such as NSP 500, likes of the NASDAQ. Some cash is actually invested in some derivatives, Now, what happens is that money is actually invested in different areas. Well, I know this one may be a bit heavy for you, but I know the ultimate question you are asking is it safe? to invest in these areas? I'm going to answer that question ultimately at the end of this video. So that's why what I'm doing, I'm just laying the foundation so that by the time now you're investing, you already know what you're getting yourself into. Are we together? So they offer what we call the portfolio diversification. Another thing about these characteristics that they offer what? They are sophisticated investors. What does it mean? Special funds may be targeted towards investors with higher level of investment knowledge. Listen, this is not an entry level investment. I told you, remember there was a time I drew some sort of a ladder here. I showed you investment, they go in different levels. Special funds are not just investment for the faint-hearted. This is not an investment that you just go there without any knowledge. These are investment that is offered by a special people. Are you together? They are kind of hedge funds, if you ask me, in one way or the other. They kind of mirror each other when it comes to hedge funds. So this investment, it is actually targeting people who already know what are investments. For me, if you ask me in a very simple question, it does not make any sense. Okay, but it depends whether you're a conservative investor or you are high risk venture or whatever you are. So what happens is that it is assumed by the time now you're getting in these special funds, you've already exhausted other areas of investments. You have yourself some MMF somewhere. You've ever tried bills and bonds. You've ever tried other safer, reliable, capital preservation investments before you explore this area. I'm going to tell you why I'm talking about that. Now, professional management. Of course, I said this about people who actually manage these special funds are who? They are professional people who understand these capital markets and financial market, the stock markets. They actually understand an array of different areas of investment. And of course, they have what we call the regulatory oversight. In Kenya, we have a body called CMA. Let me put that on board. CMA. Capital Market Authority of Kenya. This is an institution, or it's a body that makes sure that all these investments are regulated. They are known to be in existence. Not those things that you guys invest and then the next minute the company disappears. You know, like what happens with the CBEX. Now, the CMA ensures that all these investments are regulated. Now, we go to now the nitty-gritties. They also invest in areas like in derivatives. Now, let's go to the nitty-gritties now. Are special funds regulated in Kenya? Yes, they are regulated by Capital Market Authority of Kenya. And what is the importance of them being regulated? The importance of that is that they ensure, or that body or that institution, which is the CMA, ensures that product that is offered out there, they are actually adhering to the rules and the regulation. They don't just wake up and do anything with people's money. So they have to be monitored and check out what they do, whether they are risking people's money. Because the moment you risk people's money, for example, some of these special funds in Kenya have been there for quite a long period of time, and then you realize that billions of money have already been invested there. And of course, when you actually just let people's money just disappear like that, you actually go ahead and how can I frame this? You know, you sort of alienate the people's ability and the wish and will and willpower to actually invest. Are we together? So they are regulated by Capital Market Authority of Kenya. Are they known? Yes, they are known. When did they start? It depends on which one you are asking. Some started back in 2019. I think that is the earliest we have. The one that started back in 2019. And we have the one that started like last year, and others that are coming up as we speak. Are we together? Now, another thing, I asked some question when I started this video. Are they regulated? Yes, they are regulated. Are they reliable? It depends when you talk about reliability. What does the term reliability mean to you? Because when we invest, we particularly pick a certain investment for it to fulfill our goal. Let's say, for example, you'll be like, you know what? I need to take this money, invest it somewhere so that that money can be paying my house rent. So if you can actually have the returns to do so each and every time, so it can actually be termed as reliable. Are they reliable in terms of security? Well, of course, if it is regulated by CMA. Are they low risk, high risk, or moderate risk? They are high risk. Are we together? They are what? They are high risk. What does that mean? They're high risk in the sense, okay, anything that has high returns, of course, it comes with high risks. So when I say they are high risks, it does not mean that they should be avoided. It simply means, first of all, exhaust other areas of investment that are stable. First of all, there's a question that people ask, do they offer capital preservation? What is capital preservation in the first place? Capital preservation is the aspect of them assuring you that we may not assure you the return out of your money, but we can assure you that your capital, the principal money that you have invested, it is safe, it's secured, and you can get it at any given moment. So they don't offer you that capital preservation. They don't assure you that. Are we together? Now, but what happens is that these investments called the special funds, they are high risk. That's why they are able. See, they are high risk in the sense that they invest in a variety of things that anything can happen. And that's why they offer you those high returns. That's why I tell people, now, I know you are about to ask me an ultimate question. Okay, Joseph, enough with all that talking. Should I or should I not invest? That's the question that I get. And that question does not have an answer of yes or no. It depends on where you are in terms of investment. It's as simple as that. I know again, okay, you're not answering the question, Joseph. Yes, because I'm not answering the way you want me to answer. Because if I answer the way you want to answer, that is not offering a right answer in a professional way. It depends on what you are looking for. For me, if you approach me, you don't even have a zero investment. You have no stocks, the normal stocks, the local stocks or international stocks like of S&P 500. You have no money market fund, for example. You don't have any emergency funds with you. You're just bare and you're telling me, Joseph, I want to invest my pension, my entire money for my retirement. This, for me, I wouldn't recommend you doing that. In one way or the other, I would recommend you to diversify your portfolio. Anything that has high returns, of course, it comes with high risk, and it means that you have to invest a fraction of your cash into that, not entirely all your cash that you have. You have to make sure that you pick a certain fraction and invest it there. So you have to make sure that you balance all these investments. Are you together? Let me give you a typical example here. Let's say somebody wants to invest 2 million, for instance. First of all, before I even forget, before I come back to the 2 million here, these special funds, that's why I said they are offered for, or they target sophisticated investors. They are not affordable for anybody. Are we together? Some may require you to start a minimum of 500K, that's a half a million. Some will ask you for a 250,000, that is 250,000. So honestly speaking, this may not be affordable to anybody and everybody. That's why you need to first grow yourself with some other investment, likes of a money market fund. You accumulate there. Once you reach a target, then you can be able to empty into these particular investments. But if you have this cash, then of course, then we dissect, we delve into, do you have other investments with you, or it's only this one? Are we together? Do you have a special fund? Or rather, not a special funds, but rather, do you have an emergency fund? Do you have a protective layer just in case something happens? You get what I'm saying? Now, I was using an example of an individual with 2 million. And this is the money that they have, yeah? In Kenya, we say mbele na nyuma, meaning it's the only money that you have. So what you can do, you can actually divide this money into 4 segments, for example, which means like 500,000 each, yeah? Or maybe you can decide to put like 800K into a money market fund. Again, it depends. First of all, when you seek for a professional financial guidance, you have to be known. Your financial advisor must first ask you, are you a conservative investor? Do you have a high risk to appetite? What kind of an individual are you? What are your affordable loss? What is your affordable loss? So that we understand who is you. You know, there are people telling you, hey, I don't want to risk, I don't want to. So you're more of a conservative investor. So if you're more of a conservative investor, then you leverage more on the areas that are stable. Are we together? And if you are kind of a risk taker, probably because you have a lot of time ahead of you, maybe you're a young individual, then you can be able to leverage on the things that gives you a little bit of high return. So I'm just drawing random numbers here. I didn't say that if you have 2 million, you have to put 800,000 in a money market fund. I hope you understand that. I'm just drawing examples here. So 800K, you can do it in a money market fund. Then let's say you can say like 500K, you can actually throw this into something like, say, stocks or shares or whichever, can be locally or internationally. Then you have yourself like 700K, you can throw that, let's say, in a special funds or something like that. See, now you have diversified that cash. Some fraction of it is in special funds, others in, that kind of things. Okay, now, so special funds, we've said in a nutshell, they are high risk, they offer high returns. Excuse me. They offer high returns, they are high risk, they are not affordable to just anybody, They target sophisticated individuals who already have exhausted other areas of investment or have invested in other areas of not necessarily exhausted. And of course, these investments, they're actually regulated by Capital Market Authority of Kenya. And what happens is that they invest in a variety of areas. Are they safe to invest? Of course, they are safe, provided you approach them with what we call, with kind of professional understanding first. And that's why I always recommend people, please always seek a professional to guide you on the way you're supposed to invest. Don't just pick anything, even anything, not only special funds, any investment. First of all, seek professional guidance from your financial advisor, and then from there, you can be able to make a guided decision. This is good, Joseph. In case you need my services, that's my number out there, and you can shoot me a call. See you in the next one, and don't forget, hit that like button. Make sure that you leave a comment on the comment section. See you there.